Hey guys, Mike here. So today we get to answer all your questions and comments and stuff like that. And you had some good ones this week. And I know it's been a rough last couple of days for sure. Big drops. But of course, Sunday's video tomorrow will answer all that. I mean, a lot of things going against the market right now. So again, we'll see how things are acting up on the geopolitical front and see if we get any more bad news on that, because that's either priced in or it's going to drop the market even more on Monday. Just kind of put that out there. But again, we'll see what happens. We're definitely due for a bounce. That would be for sure, right? And so again, feel free to participate. And as usual, let's get right into this. First one says, said it before, we'll say it again. The real damage / risk to CrowdStrike will be contract renewals or lack thereof. The impact here won't be seen for a while, but ask yourself, if a software that has plenty of viable alternatives just cost your business a bunch of money, would you renew your subscription? And a lot of people go down here and they talk about how hard it is to replace it. It depends, and all this fun stuff. And that is very true. And I'll tell you this, let's just talk about a few things with CrowdStrike. One is the chart. Finally got down to the shaded area. I put it here like, I don't know, 2 weeks ago when this debacle happened or whatever it was. It's hitting that. It's hitting the trend line, 0.70 on the fibs it's hitting. Also, if we pull up the moving averages, it's actually hitting the moving average as well. I think it's the 100 if I'm not mistaken. The weekly we're going to pull up. Actually, I'll pull up the weekly moving average. Right now is sitting at this trend line, trying to hold on to that. Trying to hold on this area. Super, super oversold on the daily, almost on the weekly, getting to where it's got in the past. And again, I put this area in here because this is an area where buyers and sellers have stepped in the past. So a big area of interest right here. And so we'll see if they try to do this. But again, you can wait for structure just to kind of play out on this one. But when we go through here, again, looking at the weekly, you can see almost at that level. And the past 2 times it's been oversold at that level. But it's not even oversold. It doesn't even get oversold on weekly. It never has been. So we'll see if that continues down. But when you pull up the weekly moving averages, right there is if it continues to break this trend line. If it does that, then you got a lot of influence right there with the 200 and the 100 weekly moving average right there, along with it'll be retracing down to that 0.79 fib level. Again, still be in an area of interest right there where buyers have stepped in the past, and so have sellers, depending on what's going on in the market on this one right here. And the fact that, my goodness, down, wow, almost 50%. Whew! What a haircut. Like, that is amazing, right? Sitting at 47% as I'm recording this today. And when you look at it, again, it is going to be on the renewals. We don't know what damage is done, right? The good thing is, one of my members even put in our Discord was there is insurance. The insurance company is the one taking the brunt of this one, but CrowdStrike also has insurance to try to cover the cost. But the big one is going to be what's going to be happening when they go to renew. But more importantly, we will get a kind of a glimpse of this this week coming up, because Datadog, one of their competitors, is reporting. And of course, on that call, we should hear a question like, hey, have you been able to reach out to any CrowdStrike customers? Have they reached out to you? And have you been able to pick up any? And if they raise forward guidance, that would let you know they probably have. If not, then of course that's not good for Datadog. But also, the difference is maybe they're telling you, if you're a big company, I guess trying to change this software and things like that would be a beast. And I'm sure on the renewals, and this is where the hit could come, right? So let's say CrowdStrike could bounce, and all of a sudden they go into earnings and they have to lower the guidance because they're having to give discounts on the renewals, which I believe Datadog did last year when they had a breach or something happen. It was an update they did too. I think it was a disaster. And I think they did that. So if they're discounting all these renewals, which I'm talking about millions and millions of dollars, then that could be a major problem. You can take a hit down. But again, we'll have to see it. Now, next one says, hey, Mike, great shows. Really appreciate it. How come everybody worries about the gap fills up? There's never worry about gap fills that the SPY has down below that still have not been attended to, specifically one down around 440. We do look at gap fills down, but the reason why is because simple. When you look at this chart, the stock market is going up 70% of the time roughly, and it's going down about 30% of the time roughly. And so the truth is, because it's going up so much, as I'll show you, there are so many gaps, right, that it's in the past that's never been filled because we never dropped down there. And in order to get to them, we would literally have to go to like a Great Depression. Like your portfolio would have to be just scaring the brakes off of you. People would be jumping out windows to get down and start filling some of these gaps in 2012, right? You just got to think about that. And so, again, one reason this happens is with the gaps the way they are is because, as I showed you, the old saying, right? The S&P or the market takes the steps up, then it takes the elevator down, right? Or an escalator, however you want to put it. But you got, it takes a long time of moving up, and then just very short periods it just drops like a rock sometimes, right? Or we go through about a 6 to 10 month correction, okay, or crash. But again, I'll just show you. I mean, here's not even 2012. I'll just go to 2016, 17, stuff like that. And there's many gaps, right, that are created, but they're never ever covered. Okay, I mean, here's some gaps right here. When we dropped down in 2018 at the beginning and we move back up, we cover them and stuff. But again, because the market moved up for 10 straight years right there, there's going to be so many gaps that we never ever will cover unless the market, like the S&P, literally drops probably like 40, 50%, something like that. And that's just the way it is. And so, yes, that gap you're talking about, it absolutely could be filled, right? All you do is measure down 20 and 30%. Those gaps in a normal crash would get filled. Like this crash right here filled a whole bunch of gaps from 2021. Okay, and so yes, it can be filled, but as most of what happens is you get this big drop down, and then those gaps are created on the drop downs are filled on the way back up because we move up more than we move down. I hope that makes sense. Next one here says, can you advise on where best to source options information and how to interpret this as to how this impacts the stock price? A lot of ones are the most popular ones, that is, Cheddar Flow, Unusual Whales are two big ones. You can also do it on some trading sites. But these offer decent prices, what I've been told. And I know one of our members is a big Unusual Whales client stuff, and he loves it. And he uses like the flows, the premium flows from the options and everything to see when there's going to be reversals and downside risk and all that stuff. The other thing I've showed you is what I like to look for is the call sweeps or put sweeps. And like, for example, this is NVIDIA, right? So you're looking for the millions of dollars in sweeps, because when there's sweeps, they're basically saying fill at any price because they're expecting to move very, very quickly, right? Now, so on Tesla as well, where they move it up. Well, this came out on July 31st, right around like 10 o'clock. And you can see that was the day NVIDIA went up 15%, set a record. Okay, it gapped up, and then it just absolutely just went on a crazy rant, because that's what happens. These sweeps start rolling in. Market makers got to, cover and all that stuff and hedge. And so, boom, you get these crazy moves. That's how Tesla gets its crazy moves. And so there are many ways to use it. Again, like I said, one of our members definitely uses and swears by the premiums he sees on puts and calls, and is able to kind of time reversals in a way, or at least let them know where the market's going, even projecting out some and stuff. Some people just look for big, gigantic purchases, right? $10 million call option, and within the next week or something, and then they look for that as well. And it's amazing how many times you see these whales buy this stuff, right? And all of a sudden the market turns, or that stock turns, and or down or up, and it's kind of crazy because the flows. That's why I show you that guy Jim Cameron. And I show you that guy because the flows do matter. That's just the way it is. I don't know how many times I've showed on Tesla how important the flows are, and NVIDIA started going down when the flows went against it, right? So hopefully that helps out. Let me know in the comments if you guys got any you like. Now, next it says here, how do you get back on the horse after making some idiotic trades? And to me, it only takes two simple things for that to happen. One is you have to not let your emotions get involved in it. That's first and foremost. Two, you have to journal. You have to write down the idiotic trades, right? And the good trades, both of them. Figure out why. That way you can look back at home. Why this trade worked, why this trade didn't work, writing out certain patterns you may see or whatever. But some combination where you were putting together, what was actually happening when it worked, and then what did you do? Did you front run it? Did you not wait? Did you not hold to your rules or anything like that, or do you even have a plan? Okay, that's the first and foremost. So that was the things I would say for other people. Please put in the comments how you get on that one, or get back from creating a bad trade or anything like that. So just let us know and stuff. Now, last one here says, for fun, from Dr. Marcus, how do you think the Bears will do with their new QB? AI hype, or is he the real deal in your opinion? That's why I wore my Bears hat, and I think he's the real deal. I think he's the best we've had since Sid and Luckman in the 40s. And anybody knows anything about the Bears, we have had terrible quarterback play, and that's why Sid and Luckman from like the 40s or 50s still holds our QB record. So it's pretty bad. And so this year, my prediction is 10 victories at least. Obviously, he'll set all the rookie records if he stays healthy. And so, because they've loaded him with wide receivers and tight ends and running backs and everything else. So, and we should have a good defense. So, crossing my fingers here, we do have a really tough division this year. So, it's going to be rough. And all our division games come after in week 11 and on. So, like from week 11 to the last week, that's when we have all our division games, which is nuts. I've never seen it that way. That's crazy. But, you know, I mean, the Packers are tough. The Lions are tough. I don't know about Minnesota. We'll see how that goes. But, yeah, so it's going to be a fun year. I'm looking forward to it. We'll see how it goes. So go Bears on that one. So anyway, tomorrow's video will set up the week for us, and we'll go over what the world is happening right here, because obviously Friday was a interesting day as well, yeah, after going off Thursday. But, you know, and we'll see if we get any crazy headlines over the weekend as well. That's going to help push down the market. So let me know your prediction down the bottom, what you think. Please hit the like and subscribe button on the way out, as always, guys, and have a good one.